If you bought $10,000 of Ethereum in 2021, you'd have around $10,000 today. Brutal. Ethereum had a rough few months. It has lost nearly 40% against Bitcoin in just the past year. That's exactly why smart investors are paying attention. Today, we're going to show you why this might be the most important buying opportunity of the decade. Ethereum isn't just another altcoin, it's the backbone of decentralized finance, NFTs, and the future of Web3. So why has it been crashing out? High fees, slower updates, and rising competition from faster blockchains like Solana and Avalanche. But that's only half the story. Despite its price drop, Ethereum still secures over $30 billion in assets on-chain. It processes billions in transactions every single week, and the upgrade to Ethereum 2.0 is changing everything. Staking rewards now offer 4% annual returns, and nearly 25% of all ETH is locked up in staking. Less supply, more demand. Here's what the smartest money is doing right now. While the retail crowd panics, institutions are quietly accumulating ETH. Grayscale's Ethereum Trust has seen increased inflows. Major funds are positioning for the next wave. We've seen a surge of hot takes saying Ethereum is done or dead money, but here's the truth. Ethereum's fundamentals are stronger than ever. It's still the most used blockchain in DeFi, NFTs, and smart contracts. Over 60% of stablecoins are issued on Ethereum. And despite price drops, developers continue to build on it more than any other network. Look at the data. While Ethereum's price fell from over $4,000 to under $3,000 recently, its network fees, a sign of real usage, have stayed consistent. That means people are still transacting, still paying to use the network. And if we zoom out, this isn't the first time Ethereum has lagged behind. In 2019, Ethereum underperformed Bitcoin for months, only to explode 7 times in the next cycle. The same pattern could be setting up right now. Now, here's where it gets interesting. Institutional money hasn't stopped flowing into Ethereum. In fact, BlackRock just filed for an Ethereum ETF. And staking ETH through platforms like Lido now offers around 4% annually. You get paid to hold and you're positioned for upside when the market turns. But there's more to this than just holding ETH. Let's talk about how to structure your portfolio to make the most of this setup. Smart investors don't go all in on a single asset, they build positions strategically. One of the best ways to play Ethereum's potential rebound is through a 70-20-10 approach. Allocate 70% of your crypto exposure to ETH and BTC, with ETH taking at least half. Right now, ETH is undervalued compared to BTC, making it a prime accumulation target. The next 20% should go into stablecoins like USDC or DAI. Why? These aren't just for safety, they're your dry powder. You can earn 4 to 6% APY while waiting for the right moment to deploy more into ETH or other assets. When Ethereum starts to rally, you'll have the capital ready to scale in without needing to sell at a loss. And finally, the last 10%, that's your speculative layer. Look at Ethereum Layer 2 projects like Arbitrum and Optimism. These scale solutions are directly tied to Ethereum's success. If ETH runs, these often run harder, but remember, this is where you take calculated risks, not where you build your foundation. Here's the trap most retail investors fall into. They see ETH down and assume it's dead. They sell at the bottom and buy the next shiny coin that promises quick returns. But Ethereum has survived multiple cycles. It's weathered crashes, bear markets, and competition, and each time it's come back stronger. Remember 2018? ETH dropped over 90%. People said it was finished. Then came DeFi summer. NFTs exploded. ETH went from under $100 to over $4,000 in just 2 years. The people who held on, or better yet, bought more during the fear, were the ones who changed their financial future. Fear in the market is an invitation, if you know what you're doing. And now ETH is evolving again. With Ethereum 2.0, staking rewards, and increasing Layer 2 adoption, its use cases are expanding. It's not just a tech bet, it's becoming an income-generating asset. You can earn yield while positioning for growth. But most will miss this because they're focused on price, not value. So what can you do today? Start with a small position if you haven't already. $100 into ETH now, staked through a secure platform, could grow significantly over the next few years. Set up automatic buys to a dollar cost average while prices are low. This removes emotion and keeps you building your position steadily. Then take a portion of your stablecoins and look into ETH staking pools or DeFi protocols that offer ETH-backed opportunities, but always research. Not all yield is created equal. Stick to trusted platforms with strong audits and transparency. And most importantly, think long-term. Ethereum isn't a quick flip. It's a foundational asset in the new financial system. While others chase hype, you can build wealth by focusing on fundamentals and using volatility to your advantage. If this strategy makes sense to you, hit subscribe. We break down the smartest ways to build crypto wealth every week. And if you want more deep dives into crypto investing beyond Bitcoin, check out these videos next.